Good day all. Ira Epstein of Linn and Associates with your Thursday evening wrap-up. And this is for your SPDR ETF video, and it is right now about 5:20, so all these markets are closed behind me. Now, before I go too far, if you go to our website at www.iraepstein.com and you go to the free offers, you're going to see that I am offering access for free for a limited time. I haven't decided how long, but take advantage of it. If you like these videos, you're going to like the subscriber video. And no, we don't want a credit card. We're not going to charge you. It's free access to see how you like it. And then ideally you tell me, hey, I like it, I don't like it. You can do that on the YouTube channel. And I do read that channel each day to see what people are saying. But I'd also like you to tell your friends about it, because I think we're doing something a lot of people don't see. The purpose of this video is an intro to get you into the other video. Keep that in the back of your mind. The meat and potatoes is in the afternoon subscriber video that is free while I get that service going. Got it? Okay, so today we're all waiting on what is the World Health Organization going to do or say about the Wuhan viruses, they're calling it. And simply put, they declared an emergency within. They said China is in a state of emergency. I was listening to it. World Health doesn't have to declare an emergency for the rest of the world, they said, because so far, as they've discovered, there's a limited amount of cases. 18 people have died as of my putting this out. One more died today. There's over 650 known cases. Japan got another case of it today, but that person that came in and is now hospitalized was in that city in China. So that's another good sign. So far it's contained there. And of course, this is Lunar Week, the largest migration in China of people you can imagine. In fact, I think it's the largest migration of people in the world. And they're probably not going to do things that they do. That helps or hurts. Well, it's going to hurt local business. It's going to hurt staying where you're at. People are going to be confined. How do you quarantine near 20 million people? I've yet to figure that one out as well. They can stop trains and all, but how do you stop cars and everything else? You'll read about it. I'm not a doctor, but it impacted the market, and yet the stock market just shrugged it right off, came back at the end of the day. Where markets are getting hurt are in the energy sector. People don't know what to do with that. Copper has fallen dramatically. Did it fall enough? It's probably a 6% drop from peak to trough now. We'll see what it does, but we'll look at the industrial sectors and see all that. So let's get to the technology sector first. We keep seeing that the numbers coming out in this sector are doing fine. The market is paused, but even today, if you take a look, I'll take off the action. Today, this was the close of business Wednesday. This is today's break. Now remember, yesterday's low was 97.35. You got down only to 97.11, and you came right back and closed higher. When you look at the market with swing lines, they are still pointing higher. A swing line is a fancy term that I created. I created this indicator so that I could look at a chart and right off the bat, is the market trending? Well, if you got a pattern of higher lows and higher highs, that's the definition of an uptrend. A no trend is when you have a higher high and a lower low, and then you went back into a trend. The key I have discovered, it doesn't mean you have to agree with me, on any indicator is filters on it so that you're looking for reasons, not to make a trade of some type or not. Well, to make a long story short, this is bullish. When you put moving averages, a filter on it, the market's over that. That's a bullish bias to the market. The resistance point is the Bollinger Band. I want you to look at this. 95% of the time, this algorithm, and that's what a Bollinger Band is, an algorithm, it's designed to keep the market trading within it. The way that I teach to use it is the first challenges of it are probably zones the pros come out of the market, and then they're looking for other entry points if the trend is staying up and their other filters are with it. And one of the things we've had is this embedded reading. In terms of the hierarchy on charts, I consider when a market becomes embedded, in other words, the slow stochastic, its SSTO becomes embedded, it means both numbers that make it up, and there are two numbers that make it up. They call them a K and a D line. It's the same identical formula. One uses 3 days worth of value, the other 5. There's also a look-back lens in Bollinger Bands when you look at them. How many days back do you want to use? There's different ways to use it. I teach all this in my charting course, and I have my own series of numbers I like to use. When I look at the industrial sector, this is the number you would think would get hurt the most, and it fell back to the 18-day average, held it, and bounced. So what do we have? We have a market that kept running the upper Bollinger Band, made a peak, got under a previous break low, fell to what I call the line in the sand. I define the 18-day average of closes as a line in the sand. In other words, it's the neutral part on a chart. In the process, the market is what? It lost its embedded reading, started down, and often when you lose that reading, you go to the 18-day average of closes. That's what we seem to have done. In the energy spider, we have fallen really sharp. You now have, and I probably have to do it this way to get to this, you have how many days under the Bollinger Band? You weren't under it last Friday. The next day, Monday, you finished at 58.06. The market's under the 58.24 Bollinger Band, day one. Day two is yesterday underneath that. Day three is here. Now, why am I pointing this out to you? And this is the close of business today. I subtract from the 5% of the time in the algorithm as a rule of thumb. Each consecutive day takes away one of those percentage points. That is not a reason that you're buying. It's a reason maybe to say, maybe this market is getting extended because there's a 96% probability it's going to get back into the Bollinger Bands, and maybe there's a better spot of entry. Let me give you a big negative on this chart. You're about to get a bearish crossover of the 18-day average under the 100. That will catch the attention of moving average traders. When we come over to the QQQ, you still have the bullish embedded reading. That tells me right off the bat, and I looked at the futures, same thing, that on breaks, the pros are still buying this market. And what guts it takes to do that, but that's what they did. When we take a look at the emerging market, you fell back because if you think of where they're all located, they got hit with fears in Asia about this disease. It's certainly more prevalent there than it is in the U.S. at this point, so you pulled back. Are you in a bear trend right now? The answer is no. Why not? Well, while the swing line has lower highs and lower lows, it's the first challenge of the 18-day average, and where did you settle in relation? You settled at 69.79, that 18-day average 69.72. Remember I told you filter things? So as long as you stay over that average, you've got the bias up, the swing line down, and momentum pointing down. You got two of the three elements, but not three of the three. In gold, this sideways action is telling me that even though we lost this embedded reading, and you often make a run when you do that to the 18-day average, it just doesn't want to get very far down. Let's assume I'm wrong and you fall. I don't see a lot of downside in it. That's the issue. The market's already coming down and it's gotten out of an overbought condition. The difference is in the GDX. This is an ugly chart. It's not bearish or bullish. It every day is just fighting at this 18-day average looking for direction. You had an outside day down today. I'll give you a tip to what I look at. When I look at outside days, I look to see if they're an outside day down, that day's high. If it's taken out within the day after or the day after that, in other words, in English, on Friday, which is the day after, or Monday, I call that a bear trap. And often price will then travel to the closest, if there were a 100-day average up here of that number, but it's not, it's underneath. If it were to take it out, it could be the upper Bollinger Band. I see the same pattern in the GDX, the full size. So I'm not trending. I don't have the pattern of lower highs, lower lows. I have downside bias, flat momentum with an outside day. So it's on my radar scope. In TLT, overbought, hit the upper Bollinger Band. I'm trading between that and the 100-day average. Be cautious here. If it's a real breakout, this is a big base in the market, could move much higher. Probably needs to get more news on the virus. If there's no news on the virus, you're up to a resistance. You could fall back to that 100-day average. Is it a buy? It's not embedded. So the answer is no. It's just overbought. On the energy part of this market, so we come to USO, the energy ETF, first move under the lower Bollinger Band. Often that's a zone for what? or the first challenge is the profit zone. So I'll come back and show it to you. I have to do that. I don't know why, but it's making me do that. This is the first challenge and since this rally took place, and it didn't hit it yesterday. 1188 was the number. You finally hit the Bollinger Band, closed under it. Now, I'd be watching here. What's the slow stochastic doing? Let's go back here. On Friday, both numbers under 20 the next day, under 20. You got your embedded reading. Today's just a gravy on it. Look for the resistance probably between 1196 and 1203. Until that reading is lost, where the red number gets over 20, I'm expecting to see selling by the pros. Then we get to the foreign currency ETFs. This is the euro. And you've got this pattern of lower highs, lower lows, and again, I'm going to come back and to this. I don't know why it's making me do that, but it is. You haven't hit the lower Bollinger Band. You did hit the 100-day average in an oversold. I would not be surprised that yesterday you started seeing the pros taking money off the table, and when you hit the band again today, I think they took more off. You're oversold, not embedded. If it embeds, they'll play with it, I think, different, but you're not embedded. So you put it all together, you cover it. Now remember, in my afternoon Spider subscriber video, I cover the yen versus the dollar, other currencies versus it. I give you much more on the metals. I'm into the SLV. I'm covering more emerging market videos. So I appreciate you asking me to cover more, and I do. That's where I'm putting them in my subscriber video, and it's free to you. Just go to the website, free offer, sign up for that video. We'll get all the info you need out to it. You're going to need a user ID and password, no credit card. That's not what I'm saying. I'm Ira. You have a great evening. I'll talk to you tomorrow.